So we are in the final leg of 2020, and what a crazy year it has been for pretty much all of us. And I know, at least for myself as an investor, I'm walking away with quite a few lessons. Firstly, is that anything can possibly happen in the markets. And I think with COVID, nobody really saw just how bad it could get. We tend to think of ourselves as, yeah, once in a while something random might happen, but we had no idea just how crazy the fall would have been and just how crazy the rise would have been as well. So all these kind of black swan events, not as uncommon as we like to think it is. Second is that markets are really resilient. And I think for somebody who's a kind of a follower of the FIRE community, trusting that the markets will take care of themselves, even I didn't really foresee that the rebound would have happened so quickly and so well to a point where we're actually higher than our previous highs at the start of the year. And finally, with crazy kind of moves in the market like this, there's always some kind of fear that's around the corner that the markets are going to crash again. And I did a video about that months ago when people were again just worried about when the next crash will come. Not panicking, not selling out of fear and making really hasty moves, and just really being able to invest consistently. That's really principles that are timeless, that would have served you well in the entire year. And I think it's something that will probably serve you well in the years to come. And looking forward, I think it's even more exciting, which is why I'm making this video. And for me, I'm just going to share with you, first of all, what my investing style is, so you get a bit of context as to why I'm sharing the 5 key things which I'm paying attention to, at least when it comes to 2021. Hey guys, it's Sunmin and welcome back to Your Money Game, the show where we'll get better with saving, spending and investing. And cheers to the end of a really crazy year. So let's start with a quick context of my investment history and kind of approach. So I've been a self-taught investor all this while who spent many of his early years just trying his best to trade actively, but unfortunately it really just went nowhere. It was only until I read a bit more about the FIRE community, the approach of using indexes, getting to know ETFs a bit more, that I really kind of reformulated my approach. And right now, I'm what you call maybe a semi-passive or semi-active investor. While a large portion of my decision making is relatively passive and I just trust the markets to do its job, there's also a few other elements that I pay attention to, which is usually macro trends, and on top of that, a little bit of technical analysis to just aid in the decision making. The closest thing that would describe this approach is core and satellite. Roughly 70% of my portfolio is built with the core of US equities, about 20% is allocated towards China, and about 10% is allocated towards ARKK, which is an actively managed ETF by ARK Invest. Any additional investments are usually given towards robo-advisors because I kind of like dabbling with a few of these players. So with that as the context, here are the things that I'm paying attention to in the coming year. The first obvious one is something I mentioned earlier, which is this whole upcoming crash that's going to happen. If you think about the impact of COVID on the world and the economy, it is remarkable that at the point of filming this, it is very likely that the S&P 500 will end the year up 14% from the start. The Nasdaq, even more incredible, it will likely end the year with up about 45%. But who knows when the markets are going to crash, right? Nobody can really predict that. What bothers me is the optimism of the market, which has just taken prices up steeper and steeper. And on top of that, the question becomes is, have we already priced in all of the optimism and gains for 2021 and whether or not prices will eventually either plateau or hit a ceiling? If you look towards multiples like the price to earnings ratio, a lot of the indices right now are at really high levels, suggesting that the markets are really expensive. So because I have 70-80% exposure towards US markets, the question becomes is, hey, maybe I should try and reduce that a little bit and consider reallocating some of that towards other regions or maybe even other asset classes. In particular, what's looking quite interesting are emerging markets, Europe, or even maybe just buying total world. And from a technical analysis perspective, these all look like really interesting trade setups. The next thing that I'm paying attention to is the devaluation of the US dollar. And pretty much since March, we saw a really interesting spike up, but ever since then, there's been a steady decline. Now, I'm no economist, but from what I understand, it's really due to the US kind of injecting so much cash into the system thanks to all the support and stimulus to its citizens, which amounts to trillions of dollars. And what's even scarier is that if you look at the long-term charts, it's actually close towards the 5-year lows. And what's even scarier is that moving forward, we are looking at more money likely to be injected into the US economy thanks again to another round of stimulus. So because I have so much money with USD exposure, the question becomes is how do I navigate this, and should I maybe even consider moving some money out perhaps towards euro denominated funds, or maybe even perhaps looking at buying assets like gold. The third thing I'm keeping my eye on is the sector rotation that began sometime in November. So like I mentioned, the Nasdaq is going to be up roughly 45% for the year. So it has done an amazing job at showing resilience and again, maybe even the over-enthusiasm of investors out there. However, since November, we've seen small cap stocks and maybe even small cap value stocks starting to outperform the Nasdaq. The first explanation is that tech maybe just got ahead of itself and really charged ahead too far, and therefore money is just reflowing back towards sectors that have been lagging. This could also be a signal that the economy is actually beginning to move into a different cycle. And traditionally, in the recovery of a recession, small cap stocks tend to do better. And of course, all this is supported by the wonderful news that vaccines are finally beginning to move. The fourth thing I'm paying attention to is Joe Biden's administration and how they interact with China. And if you've even just stumbled upon casual news, you would have realized that the US-China relations are at one of its worst periods in history. Call me a peace-loving guy, but hey, all this tension is really worrying. Any form of instability, especially towards the world's largest manufacturer, is really going to cause ripples that affect pretty much the entire world. I don't think it's isolated to these two countries alone. So it looks as if like Joe Biden will be inheriting a really tense scenario, and that really might be a good thing because all he needs to do is not try and antagonize China too much more, but at the same time try and walk that fine line in being strong for America. Because at the end of the day, yes, he's got to take care of his own people, right? So I won't go into too much geopolitics, but if you're interested in it, I've attached a link below so you can read up more about it. The final interesting thing that I'm keeping my eye on is the continued rise of cryptocurrencies. So this is a very new space for me that I'm still trying to wrap my head around. Trying to read about blockchain, understanding cryptocurrency, understanding crypto projects. It's definitely a really interesting space. Specifically on Bitcoin, I'm not a Bitcoin bro. Currently, I don't own any. But at the same time, I'm not really a disbeliever as well. So to be honest, when I first heard about it years ago, I was really dismissive of it, quite like the majority of people even today. But over time, especially in the past year, I've been exposed to quite a few more interesting figures in the space. Namely Anthony Pompliano, who's got really thoughtful pieces on his podcast, as well as Raoul Paul, which is the CEO of Real Vision, and he shares quite a lot of investing insight as a macro investor, and his perspective on Bitcoin are really interesting. So what's really putting me off right now is just how hyped up the market has been. I know it's trading at around 23,000-ish, and it's so volatile and it's so exciting that traditionally when you see this kind of frothy space and movement, it's usually a bad sign. Then again, I'm somebody who's still very new into this space, so if you happen to have any other insights that you want to share, please feel free to comment below. And yeah, I need to learn a thing or two as well. What do you think is a good entry point? So yeah, those are the 5 things that are really keeping me engaged with the markets. And I hope that you're equally excited with the year to come and that you got some value out of this video, or maybe even a few new ideas. For those of you out there who've been following my first year into YouTube, thanks for all your support. I really do appreciate it. And if you haven't done so already, I would really appreciate you clicking on that like, subscribe, as well as that bell button, because all of those little actions really do help my channel grow. And of course, I'm still going to be here back in 2021. But for now, this is Sunmin signing off for the year 2020. Until next year, you take care and keep playing your own game.